We all naturally want to become successful. We also want to take shortcuts, and it's easy to do, but you can never take away the effort of hard work and discipline and sacrifice. Apollo Ono. My friends, the hard work, discipline, and sacrifice we ask for is 10 to 15 minutes each and every day, following the markets, learning how to chart the stocks that you are interested in. We show you every day the four big index, well, the two indexes we follow, which is the S&P 500, the NASDAQ 100, 20-year bonds, and the commodity of gold. We also chart Bitcoin. We do this every day, 10 to 15 minutes. You can apply the lessons we teach here to your favorite stocks, your favorite ETFs. If, of course, you're a Patreon supporter, we give you up to 20 weekly vertical crossovers a week. That is the real secret sauce to what we do. Weekly vertical crossovers are power moves in stocks and ETFs. That is where you see the price percent oscillator on our weekly chart crossing over, going up or down on our charts, and invariably those are power moves where you see inherent weakness coming into the chart or strength. Now that is shown over and over again by what? The fear and the greed that moves traders, investors, billions of transactions across the market. That is our secret sauce. It is the weekly vertical crossover. Typically, we like to see not only the price percent oscillator move, we also like to see the derivative oscillator at the same time of that crossover, see it occur also. Typically means that we're going to have enough of a move to be able to take a chunk out of that action. It doesn't get you in necessarily at the very beginning, but it gets you in a time period where you can ride that movement up or down. Now, sideways action is very difficult for the price percent oscillator. It's one of the weaknesses of a lagging indicator. The derivative oscillator helps us see when those things are lagging, when it's not switching over at the same time as the price percent oscillator. It is showing us some perhaps, and again, because the derivative oscillator is a leading indicator. So that can show us some weakness in what's occurring on the price percent oscillator. Every day, 10 to 15 minutes, you follow these charts with us, you'll get a better and better understanding. Practice trading, learning by doing. Let's jump into these charts. Stocks and bonds are up. Gold and Bitcoin are down. Bitcoin hammering down again, 8.31%. But before we get there, let's jump into the S&P 500. What do we see going on? Well, we've had this divergence going on several weeks now where we had the weekly vertical crossover going down, but stock price movement continued to tick up. Now it ticked sideways and down last week with the price percent oscillator pulling away more from the red signal line and the derivative oscillator gaining downward momentum. And this week, we see even more indecision so far. We almost have a doji here. So again, watching as things slide along. Look at the two-day chart. We had a big two-day down candle representing Friday of last week and Monday of this week. And then we see so far on Tuesday, we have a green spinning top. Price percent oscillator still down. Derivative oscillator actually going red. And we move on to the half-day chart. What do we see there? We can see where things bound down on Friday and have tried to move up, touching the two-day trend line. That's not a great trend line. We talked about that yesterday, but that's all we got right now. But moving up for 2 days. Hasn't crossed over yet, but looks like it could be headed in that direction with some exuberance in the marketplace. So we'll continue to watch, wait and see where things are going. We haven't had that 2-day even crossover. Got close back on the 15th and then bounded off. So 5 days, 4 of those down movement. This first day of the latest 2-day candle up. So that is where we are on the S&P. Now, the NASDAQ 100 up 0.93% for the day. We can see that we are going into the 5th week of up movement, but even it hasn't crossed over yet on the price percent oscillator. The derivative oscillator has gone positive this week, 2 days into this 5-day candle. We look at the high so far this week, 348.03 last week, 346.38. So it has topped higher, but again, not enough energy to cross over yet. That could happen for the end of the week. We have had, unlike the S&P, we see that the NASDAQ 100 did have a 2-day crossover going up back on the 7th. That was Monday, the 7th of June. And we have seen many days of movement pushing up green candles since then. So again, different with the tech stocks as opposed to the large multinational businesses that make up the S&P 500. And of course, on the half-day chart, it had been tracking sideways, and for a day and a half now, we've seen it moving up. And at the end of the day, the latter part of the day, we saw the movement actually move over on that price percent oscillator heading up. Derivative oscillator went positive. So we'll see where things go there. And again, still have this divergence in price. You see price reaching higher, but the price percent oscillator isn't as high as it was back on the 30th of April with a high of 342.80 and a high 348.03, and we see that price percent oscillator is lower than it was. That's what we call a divergence there, showing some inherent weakness. So we'll continue to watch, see where this leads us. Look at bonds, up 0.24% for the day. Bonds crossed over all the way back on the 30th of April. Slid sideways the next week, down 2 weeks, but since then it's been slowly trying to gain a little steam. Lots of steam last week with a high of 146.04. This week, not as high, 144.49. We can see that reflected in the price percent oscillator not heading up at the same angle. That derivative oscillator continuing to gain momentum. Look at the 2-day chart. And of course, you can see where that as far as our Heiken Ashi candlesticks go, got some weakness as far as this day goes. Again, not up a whole lot, but not getting anywhere near where the highs were on Friday and Monday. Well, the high, we'll see that in a second. We'll go to the half-day chart. But the price percent oscillator still moving up. Derivative oscillator flat. Here's where you can see where the up move really took place. That was on Friday, on that 2-day candle, down on Monday. Down in the morning on Tuesday, bit of a recovery in the afternoon, but that oscillation went negative on both. So we will redraw our trend line reflecting that down movement. And again, we will follow where bonds go. What about gold? Gold down for the day, 0.42%. Start off with that weekly chart first. You know, where gold just pegged up through Friday, the 4th of June, and then started weakening that next Friday, the 11th of June. And then, of course, this past Friday, what did we see on the 18th of June? A really down week for gold. And then, of course, so far this week, haven't reached the low of last week, but again, a red down candle forming, no wick on top. Price percent oscillator sure looks like it's trying to get close to crossing over, going down. Hasn't happened yet. We look at the 2-day, of course, it crossed over going down back on the 15th. We can draw a better 2-day trend line now, probably. Yes, we can. And again, we can see a slowdown in the down movement, in that downward progression as far as this green solid candle shows us. But that price percent oscillator still tracking down, derivative oscillator heading down, half-day chart. You can see where gold pounded down and is sort of running along sideways for the last 2 days. So we'll continue to watch and see where that takes us. Can we draw a better trend line than that? Yes, we can. I mean, Not anything great, but we'll give that a shot. That is where we are on gold. Now, lastly, we go to Bitcoin. We'll go back to the weekly first. Bitcoin, as I told you at the beginning, down 8.31%. Again, pounding a lower low this week. Price percent oscillator tracking down. Derivative oscillator losing a little bit of downward momentum. That's primarily from 4 days of some up movement on that 2-day chart, and then tracking over this latest day, hitting a new recent low for Bitcoin of 30,221.76. And we can see that price percent oscillator tracking down. Half-day chart, again, just moving down on Bitcoin. What does this mean? Well, it means that you're going to have to wait a while for Bitcoin to bottom out before we expect to see any strong, sustained up movement. There is just a lot of downward pressure. You see it on the long-term weekly, the midterm 2-day, and even the short-term half-day. That's where we are, folks, as we end the day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.